Happy New Year from Sprott Money, sprottmoney.com. It is a new year. It's 2025. Here we go. Kicking off the new year, the month of January, with your precious metals projections video. I'm your host, Craig Hemke. Joining us is our regular monthly guest, Chris Vermeulen of the technicaltraders.com. Chris, nice to see you. Happy New Year.
Yeah, Happy New Year to you, Craig. Pleasure to be here.
We're a little bit into the new year already. It's the 7th of January as we record this. We've got a couple of trading days under our belt. So we'll have a lot to discuss, no doubt, in the next couple of minutes. I want to remind everybody, though, that Sprott Money is your sponsor of all this content. You should subscribe to whatever channel you're watching so you get prompted every time something is posted later this month or next. All kinds of content all month long. Also go to sprottmoney.com for your best deals on physical precious metal. Scroll through the site. You can see all the deals, all the other items that they have on offer, and you can call them at 888-861-0775, and somebody will be happy to help you out and get some precious metals out the door and into your hands. Chris, the year is underway. We're a couple of days into this brand new year. I'm sure you've got a number of items that you've noticed already this year that are moving, that best asset now, worst asset now. As 2025 begins, what are you watching?
Yeah, I mean, let's just grab the charts. There's a lot kind of going on here. If we take a look at, let's just pull up, get this chart going. Here we go. If we take a look at the charts, there's quite a bit going on. We've got, let's jump over to the equities market. We got a little bit of volatility. Obviously, over the last couple of weeks, we saw the market start to correct. This is the SP 500. And I did an update last night with members, which I'll share here because it gives some good insight across a bunch of different things. So this update that I shared last night with members was talking about, now this is a 30-minute chart of the SP 500, and I love to zoom into the intraday charts, and then I step out to the daily, the weekly, the monthly, and it gives us a very clean perspective of what the markets are doing. And so this short-term analysis, this is really only a few days, 5 trading sessions. I have this FOMO indicator, this red indicator at the top, which when it's above 3, we typically see money flowing into aggressive stocks, people piling in, buying on the ask, meaning they'll pay any price to get in. This indicator spikes, and usually it means we're going to have a little bit of weakness. It's a short-term top. Everybody's piling in at the same time, and then the markets pull back. And we've seen this happen 3 times now over the past week. And yesterday, not yesterday, I guess it'd be the 6th, we had a gap up, a big gap, and I was expecting us to see panic selling here, or sorry, FOMO buying, and the markets to push a little bit higher. Now, this was gaps tend to get filled when there's FOMO buying and everybody's doing the same thing. Usually the move is over. And then on top of it, that move all happened on Trump, talking about tariffs might not be as heavy as he thought. They're going to be more select to where they are. And so I was telling members, expect a little bit of a run up in the morning and then for that gap to fade. And of course, we're selling off even more today, dramatically down for another high. So it's important to know these little nuances because it allows you to control your emotions and your trading. And the next step here was really looking at, I still believe we're in this stage 3 top, Craig. You and I have talked about this many times. We're in this camouflage phase where the big tech companies are keeping the stock indexes pushing to new highs, but the majority of stocks are really underperforming and nowhere near highs. And, you know, we saw just on the 6th, this is my ban hot list, the best asset now list. And you can see all the money was flowing in on this big gap up day to all of the growth and aggressive traders like babies. You know, it's Bitcoin, it's semiconductors, blockchain, clean tech, all the ARK ETFs, uranium, lithium, bots, all that stuff. Money is piling in. And when we're near a high and the underlying market internals continue to erode, we're in this complacency move emotional wise. I think a lot of people think we're starting a new bull market. I think you were about to go for a very swift downward move and go into a huge sell-off, which kind of is probably going to benefit over the next month or two precious metals really well. And we're seeing the market sell off as you and I are recording this, and gold is starting to move up just like it should be in this phase. And then the one last kind of angle that a lot of people don't fully grasp is the understanding of dividend stocks. And this chart here shows the SPY, the equal weighted SP 500, which is the general market without the tech heavy weighting. And then the SPYD is the high yield dividend stocks. And what's interesting is we saw everyone piling into all those growth sectors I just showed you. And we saw the SP 500 index get lifted up. And that's because everybody's driving it. It's camouflage. But the dividend stocks almost fell 1% yesterday. And when we look at the SP 500, which is an index that masks what's going on, it's only down about 2.25% from all-time highs. Yet the dividend stocks are down almost 10%. And this dividend stocks are where the majority of investors in the United States have their money. If you're 50 plus, close to retired or retired, you're in the big blue chips, the big dividend paying stocks, because you want the yields, you want the passive dividend income. And when they start selling, they all sell the same things, which are all the same stocks, and they get hit the hardest. And so there's big divergence here. These dividend stocks are selling off in a big way. That means a lot of fund managers, a lot of savvy investors are unloading and getting out of this market where the majority of the money is, because I think they see music coming to an end. And that kind of confirms what you and I have talked about, that I believe we're very close to a major market and economic peak. Any money you put in here is really just maximum risk. There's not a whole lot of upside left, but a ton of downside risk. So that's it from a nutshell, from the short term to all the way to the longer term kind of perspective of how the money is flowing. So during this phase of the market, this is where precious metals should hold up and move a little bit higher, while the stock market starts to struggle in a much bigger way.
If you project that out much, Chris, I know I just got done writing my annual forecast, which is just like this labor of, not love, it's just a labor to do. Do you project, you ever can think, very long term and think about, okay, I think in the bigger picture, the S&P is pulling back a certain amount. Can you project forward like that?
Yeah, I think the SP 500 is probably going to have a very big correction. If we go back and use Fibonacci extensions, we could go way back in time here. There's a lot of downside potential. I think the SP 500, this is the 2008, 2009 market low. I think there's potential for the stock market, the SP 500, to pull back from the all-time highs, roughly about 35% to all the way down to about 55%. So I think there's a huge downside move, very similar to what we saw in 2008. This bear market will probably be caused by a whole bunch of different stuff. Every bear market is triggered by something new, but it's still the same mental or herd mentality. When people start to panic, they get out and the stock market corrects. So I think there's a lot of downside potential in the equities market. In fact, three really interesting charts, Craig, that I don't think a lot of people really follow because it's so long and slow, and everybody likes the more aggressive, active kind of charts. But check this out. So if we look at the SP 500, and I love Fibonacci extensions because it allows us to project where those upside targets are. We have the run from the COVID low, and then we have the 2022. And if we carry it forward, you can see we have hit that 100% measured move. Well, first of all, we step back, we hit the 618, and if we have a hiccup or pause there, we usually go up and hit the 100% measured move. We have done that. Maybe the stock market has another little push high, but overall, that measured move, the main move to me is done. So there's very little upside in the stock market, probably going to see a big pullback in the coming year. And then, of course, if we take a look at gold, gold has done very much so the same thing. When we look at the big picture of gold, you and I have covered this many times. Yep. Gold has hit from the last super cycle right over into here. It's also hit that 618, had a multi-year pause, just like it had back over here before taking off and starting the next bear market. Well, we got the multi-year pause, we got this takeoff, and I believe we're going to come back in, see some short-term weakness in the precious metal space this year. As I mentioned earlier, I am a little bullish on gold right now. I think we could go back up and test these highs, maybe squeeze a little bit higher, but the big easy move in gold and the stock market are kind of over. They've had that measured move. And the last one, which I think a lot of people will find kind of interesting, is the Bitcoin chart. When we look at Bitcoin, And we do the same thing here. We do the measured move. We have the ultimate low. We've got this high, and then we've got this low. We carry that forward. We got into Bitcoin this about a month and a half ago. We got in right over here. We hit our first target at 618, which the market actually paused there for about a week and a half on the daily chart. So it did have a hiccup and pause there. And then we came up and we sold the rest at 107,800, right up at the peak, and now it's pulling back. So we got stocks, precious metals, Bitcoin, all hitting their 100% measured moves, all kind of being rejected at that level. And so now it's like, okay, are we going to go into a much bigger correction, or how long are some of these markets going to pause for before they maybe have another huge leg up? It really just comes down to reading the charts, following the trends, and then managing our positions. But these monthly charts really set the tone. That's the whole point of you and I doing this, the monthly projections. The monthly charts give us a really good view. And I think based on these charts, we have quite a few months, 3 or 4 months potentially, of choppy sideways in these three asset classes: stocks, gold, and crypto, until it builds a new chart pattern, paints a new chart picture for us to then take action for the next move.
Well, it kind of lines up with some of the fundamental macro stuff, where Powell doesn't seem to know what he wants to do next. The economy is giving mixed signals. And then probably until we get a clear idea of that next monetary policy trend, maybe, that's exactly how it plays out, Chris. Why don't we just take our last couple of minutes to focus upon the precious metals. Gold and silver both having a very sharp pullback that began in October, kind of accelerated downward with Trump's election and a big rally in the dollar index in the fourth quarter. Well, the dollar index is up something like 8% in the fourth quarter. But now here we are. Gold looks to be kind of flagging on that longer term chart. But enough about what I think. What am I doing here? It's about what you think, Chris. What do you see here?
Yeah, well, I mean, you're a technical analyst. You're right. I mean, it's totally flagging. It's in a kind of a pennant formation here. Gold has been doing a series of these patterns where it has a rally up, it pauses, it rallies, it pauses, it rallies, it's pausing. So gold is still, from a long-term perspective, it is still in a very strong uptrend. It's just hit its short-term measured move, which was right up here. And we saw that first bout of selling, as you mentioned, in October. And now it's doing a pause. And I think we could see, if the stock market has weakness, people are going to look for a way to get safe, move their money to something low volatility. Gold moves percentage-wise very slow, so you can put a lot of money there and not be sweating bullets. And of course, I think gold and is going to kind of be that safe haven play where it could drift up and test these highs, maybe make nominal new highs over the next month or two, especially with Trump coming in. There's a lot of uncertainty going on. And when people are uncertain, they kind of move away from stocks and they move into things that kind of outside of the financial system, which, physical metals is definitely that. And you and I have talked about this. I've shared this story a few years ago. In Canada, there's only 3 major internet providers. Rogers is one of them. They went out. Half of Canada or more was out of internet. And I had to go in town to find internet on a different channel so I could do my morning video report. And a guy, a fund manager, said, "Hey, Chris," and I didn't know who he was at the time, but he's like, "You wouldn't believe it." He goes, "I just filled my car up with gas with 2 silver rounds." And it was funny because you couldn't pay with credit card. And this is where I think gold really shines, pardon the pun, is if there's some big war, the internet goes down, some EMP, electronic magnetic pulse, puts everything down, the only thing that you really have for currency, a gun and a bullet, or precious metals, where you can have small, you can break things up into these tiny little wafers of 0.5 gram or 1 gram bars. I've got a gold Sprott bar here. I don't know if you can actually see it, but it says Sprott Gold. But if crypto if the internet goes down, crypto is useless, where physical gold is the ultimate currency, because you can just break a piece, you shave some off or something, right? So I love gold for that reason. And that's why gold tends to do well when there's global uncertainty with currencies. There's bubbles in real estate, bubbles in equities. It really, to me, is kind of that ultimate. It always makes me think of the medieval days, castles and right. Horses and knights. It's so old and barbaric, but it really is the coolest, one of the coolest asset classes to hold.
And basically every ounce that's ever been mined is still around. I was in churches last weekend. It was the Feast of Epiphany, with the 3 kings. that bring the gold and the frankincense and the myrrh, right? And I was like, that same gold could be in that ring. Who knows?
Yeah.
You know, it's been around forever. So it does have a fantastic role in your portfolio. How much is always dependent on your individual circumstances, but boy, as 2025 begins, please consider adding some physical gold. Chris, one last chart. That silver chart, it has had quite a pullback as well, but it's finding support where you'd like to see it. It's holding above $30. What do you see?
Yeah, you're right. I mean, it's had a pretty good pullback. It's settling down into this $30 range, which is a nice whole number. It's a level we've seen highs before,
Yep.
and we've seen price consolidate. It was either above it or stuck below it, and right now we're back above it. So I think silver is going to do very much so the same as gold. I think gold and miners could potentially continue to move and drift higher for the next month or so, as all this uncertainty with Trump and maybe new rules and regulations get put into place. I think it could move back up. So silver has pretty good upside potential compared to gold in terms of percentage wise. I think it could rally 8 to potentially 14% back up to those highs fairly easily. For gold to do that, it's only a couple percentage points. Silver, a lot more potential, but also it's a double-edged sword. If it rolls over, it drops very quickly. But again, I think we're going to see precious metals kind of do one of these where they kind of drift up and become a defensive play. I think the stock market is about to struggle. And we just got out of the stock market, out of the NASDAQ at about a 10% gain a couple of weeks ago, just as it was starting to roll over. And we don't really want to be in stocks right now. And now the play is you got to be in a different asset class that benefits chaos and uncertainty and goes up while the stock market struggles.
Chris, I look forward to speaking with you next month to see how this all plays out. I want to urge everybody, though, that you don't have to wait till next month to hear from Chris. That you can go to thetechnicaltraders.com. Tell everybody what they receive when they get there.
Sure, yeah. If you go to thetechnicaltraders.com, I do a morning video before the opening bell, so you get all the nitty gritty from intraday to big picture view for all the asset classes, talk about the positions. Pretty much all I do is I manage my portfolio, and you guys copy my trades, my alerts, my allocations, and it's super educational. You learn from the morning videos. Will help contain your emotions during big days and gaps like yesterday. A lot of people were nervous. Our FOMO indicator was telling us everybody felt like they were missing out, and here we were talking about, this is going to be a fade. It's going to pop up. Everybody buys in, and then they get hammered. NVIDIA is going to be down pretty sharply now from there, and people pile into those stocks, NVIDIA and all of those, and Tesla, and people just get sucked in near the highs. That's what I do. Is I help manage emotions. I help manage your account in terms of I give you signals, you execute them yourself. And you can also visit me on YouTube, The Technical Traders. Subscribe to the channel there and watch the updates that I do.
Sounds good. You do terrific work. And please, again, keep the technical traders in mind and keep SprottMoney.com in mind as we go through this month. Dollar cost average your way into more physical precious metal. It's always a good strategy, and Sprott Money, SprottMoney.com can help you out. Chris, thanks so much. It's going to be a volatile month, but I look forward to seeing you again in early February.
Yeah, sounds good, Craig. Always a pleasure, and take care, everyone.
From all of us, Sprott Money, SprottMoney.com. Thanks for watching. Keep an eye on this channel, though. We'll have more content as January continues.